Well, Michael Burry once again sounding the alarm, blood on the streets, blah, 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 mother of all crashes. And some of you will say he is like a broken clock, only right twice a day. And I would say no, he is a traitor and he gets it pretty darn good. I mean, he might be a little early to the game, but I'll show you in the charts. Actually, not really. And right now, he's coming out insane. Big Short. He's not saying that. It's just Market Insider. Investor Michael Burry predicts a U.S. recession. No duh. Okay. We're already in one. Well, unless you're the administration and you change the what a recession is in 2023. Good luck with that one there, Biden. And another inflation spike. Wait, I thought we're going into disinflation or deflation. How are we going to have an inflation spike? Well, I will show you. Well, that is if the Fed does what the Fed always does. Screws everything up, which is great because the Fed is like a broken clock, right? And you can make money from their stupid broken clock because they're always wrong. So when they're raising rates, they should be lowering rates. And when they're lowering rates, they should be raising rates. But you can take advantage of that. Michael Burry, and then let's take a look at his clock timing because a lot of people are like, oh, he lost so much money. He was so early on that short on Tesla. He didn't get it right like Johnny Bravo did. Michael Burry of The Big Short reveals a $530 million bet against Tesla. Well, when was that? I'm glad you asked. That was the beginning of 2021. Michael Burry is long puts. That's the options market. You can buy things on the way down. Let me rephrase that. You buy a put thinking that it's gonna go down. And I'd say $500 million, that's a lot of money. He did make a lot of money on puts on, let me scroll down. I'm sure it's probably right at the beginning. Famed investor Michael Burry on Monday revealed in a regulatory filing of a short position against Tesla worth $1 billion. Burry has mortgage crisis. No, sorry, second line. Mortgage crisis, subprime. Made a lot of moolah on that one. Coming over to the monthly, January 2021. That's a good call. Okay, I'll take it. I don't know if he made money where he exited, but 6 months, that would put us May, June, July. So yeah, there you go. Right? He could have walked away with a good 14% on that one. But then off to the races Tesla went. Well, that is until Johnny Bravo, right, took the stage, and I said, hey, kids, let's all put a short in. And I put that in the course at 253.61. Price target is actually down there, but I exited 50, and then I got pretty much all out, and then I decided that's the 200-week moving average. If I could do a new play, I don't know what Michael Burry, if he's buying puts on this one or not, but in my book, you still got some ways to go. Can you believe that? Everyone called me a complete idiot when I said we have a price target of $78 and it was at 253. They said that would be impossible. And I say not impossible, and the charts were predicting that you were going to see stories like this. Let me scroll up for you. You got to probably clean that a little bit. It's a little wet. January 2nd, that would be today. Tesla reports record quarterly deliveries, but misses estimates. Oh, wah, wah, wah. That means good news doesn't matter, but bad news absolutely matters. So do not be surprised when the markets open tomorrow that we continue to head towards the price target. Let me move it to the daily on Tesla. When we cracked that 200, it's like, oh, head and shoulders. Let's take out a short. Well, I mean, that's where I did it. And then all the way down, that's underneath the 200. And now we're underneath the 200 weekly moving average. And Burry also has more dire warnings for you. Sorry, I sidetracked on Tesla because I thought that was an interesting one. I saw a squirrel. But I'm just trying to help you that you can actually predict, where your money's going to go. And based on the charts, here's the SPX, S&P 500, your 500 companies. Here you go. They're going lower. All of your money, right? It's going to go down. And then it's going to go down even more. See that white line? We got to make it to that white line. That's March, May. Like, this is when earnings really start to play a significant role on your portfolio. And for those of you that are like, oh, Bravo, you don't predict, you just always doom and gloom. It's always so bad. No. I say make money on the upside, make money on the downside. I actually went back to find out, when did I launch my swing trading course on how to make money going up? See the red flag? That was right there. Guess what that was? That was right when we went above the 200 daily moving average. And everyone's like, no, we have so many legs lower. This is, that word I can't use. We're in it. We're all going to die, blah, blah, blah. And I'm like, nope, we're above the 200. Launch a course on swing trading up, which that was a fun run. Wasn't that nice, guys? From there, when I launched to the top, and this is, 50%. That's just on the S&P 500. But then Bravo changes his mind like a broken clock and decides to go with a bear market course right when we went under the 200-day moving average, again making money to the downside. And the trolls still be a trollin', even though it's like I put the flag right in the ground. I'm like, make money going up, make money going down. It's good, but then it's gonna reverse again. Also, if you want to learn how to do this, link in the description, 70% off. My New Year's day after day sale, 70% off on my swing trading one, if you want to do that. Or that would be market go up, or market go down. That would be my bear market. The only problem with the bear market, it's a little bit more advanced, so you might get a little lost. Also, if for some reason you're just like, give me all your courses, I put them all in a bundle for you for $199, 4 payments. You get everything I've done. My crypto one, you guys did very well on crypto. Well, until again, right? We start in a bear market. I taught you how to handle that one. Swing trade, Amazon, you name it. And actually on the Qs, you could have made a lot more money right here. Not such a hard V bottom, which you had on the S&P 500. It's in the course. When you have that V, it's a pattern. Usually after that, if it confirms, we're going to the races. Whoa, what did you guys make on the NASDAQ? That was a better run. That was almost 81%. But then what goes up must come down underneath the 200 again. Let's make money on the way down. But you got to be ready to pivot. All right, you got to be like Jerome. We're gonna pivot. So you got to have some macro, kind of get an understanding of what the frack is going on, so you can read a story like this. Here, I'll explain it. Big short investor Michael Burry predicts a U.S. recession. Okay, check in 2023. That would be right now, and another inflation spike. This is going to confuse people. All right, so we just had that inflation. Which I actually look. There's me like. Which I actually showed you yesterday. Inflation. So we have inflation, and then we have disinflation, and then we have deflation. And then the Fed jumps in, and we have inflation again. Yay! This is great. Look, see, at 7 point. Now, they should have pivoted. See, in 2020, 2, 1, December 1, 2021, 1, 1, 1, 2, 4. Okay, it's time to pivot. Stop doing what you're doing. Now you can crank rates at the short end. All right, fine. They're like, no, we're perfectly fine. Inflation's our friend. Well, until it's not. That actually, I think all those, 400 PhDs are a little surprised that it got up to 9.1. And then they're like, okay, I guess we'll do something about this. And then said pivot. And now, as you see, it is rolling over, which what goes up can actually come down a lot faster. So you could have a you could have this, your inflation negative, which it was back in 2015. You had negative quarters, negative months. Michael is thinking is the Fed this year will pivot, okay? And then we're going to get hit with inflation again. But I don't know. It could. All right, we'll know. But okay, here we go. So Michael Burry said he expects the U.S. to slump into recession. Yep, check. And inflation to spike again. Confusing. Check. The Big Short investor predicted inflation would decline overall in 2023 as the economy weakened. Yes, the economy is completely weakened. It is a gigantic dumpster fire, and what are we going to do? Well, let's just give people money. It seemed to have worked perfectly the last time. The Fed and U.S. government would respond with what? Stimulus. Here we go again. Policy causing inflation to jump again. So, moral of the story, inverted yield curve. That thing's going to revert, smash down, bring interest rates down. Everything's going to go bad. Okay, sorry. So buckle up, Buttercup. 2023 is going to make 2022 look like Disney World, where it seems really fun at the beginning until you check your account balances and you're like, I spent what? And then you get on rides like Mr. Toad, right? And then in the end, I guess you're in hell. Yeah, that's how it's going to end. And this was always confusing for my kids. Cue the fire. It's like, wait, Dad, we're in hell now. It's all right. This is how the ending. This is how Disney ends. Moral of the story, kids, make sure you trade Disney. You don't hodl it. And I do want to take his words right out of his tweet. So here it is. Inflation peaked. It did. But he says it's coming back. This is great. You know, just when you're treading water there. Also, if you could, throw me a life preserver. Save Bravo, please. How do you say save me? Click the like button or click share and copy. Probably don't even have to do anything with it. They're just like, YouTube's like, oh my gosh, this guy actually says something. Maybe will break me out of that little cage that they've had me in for 2 years. But it's okay. I'm not complaining because I have you. But anytime you can push anything, please push it. But inflation peaked, but it's not the last peak of this cycle. Dump, dump, dump. We are likely to see CPI lower, also known as CPI, possibly negative. Hey, that's what I said. And the U.S. In recession, yep, check. By any definition, I like that. By any definition, that would be 2 negative quarters. Little poke, poke. Fed will cut and the government will stimulate like they always do. So be ready. Your doom and gloom, making money on the way down, is going to flip. It's going to do a flipperoo. You got to come along with us. That's why you subscribe, because I'm like, okay, guys, we're going up, but I'll still be doom and gloomy because it's fun. And we will have another inflation spike. It's not that hard. Well, I don't know, Michael Burry, if it's hard or not. And actually, I just added to what he said. Sorry, it's not hard. Okay, it's not that hard. I added to that, so it's not hard. And maybe I should just tweet that last sentence. That'd be a good one. Too bad I don't use Twitter. Well, maybe now that Elon's over there, I should start using it. I could say things of complete nonsense, as if all 5 of you would follow it. Big Short, the more gloom. Bring it, Michael. Makes a dire prediction for 2023. The legendary investor anticipates a dark scenario for the U.S. economy this year. And I say yes. But then we will be saved by the government and stimulus. So bring on the stimmies. And also, just in case, I know you're wondering, you're like, are you going to pivot, you know, when they start doing stimmies? Because each video will get like 500,000 to 1 million views. The answer will still be no. And all the YouTubers are like, we're making so much money on stimulus videos. We could pile them all in and tell them to buy our course and stocks. And then I'm thinking, like, is that the really kind of person you want? I mean, I think they're kind of like financially not, you know, all there. I mean, if I'm sitting there Googling, when do I get my next stimulus? I think there's some problems. But guys, it is not just me and Michael and YouTubers that are going to say, look at this, Wall Street Journal. Here it is. Here's the prediction for next year. Big Bank predicts recession. And then the Fed's going to pivot in 2023. We'll have a little bit more stimmies. More than 2/3 of economists, two-thirds. That's a lot. 23 major financial institutions expect the U.S. to have a downturn this year. Okay, so if we're in a downturn, are we going to be buying and hodling, or are we going to be shorting? Also, just in case you've forgotten, today's the first time you've ever seen me, the Fed, okay, in a tightening cycle that we're currently in. There has never been a bottom. The bottom has never showed up in a tightening cycle. So don't think you're trying to catch a fall. Well, you're going to be catching a falling knife. Don't do that. Just the trend is your friend. You make money on the way down. Okay. Just wait. We might miss it by a month. It's okay. It's all right. Think of all the money that I saved you on car insurance when it keeps dropping. You're like, is it here? Is it here? Should I buy here? Well, it's at a 52-week low or whatever YouTube pundits say. Like, okay, well, now it's at a 100-week low. Now it's at a 30-year low. But right now, percentage of U.S. banks tightening lending standards. See this? That's where money comes from. No, it doesn't, Bravo. Money comes from the Fed and their printer. No, money comes from you walking into a bank and you saying, I want a loan. And they say, poof, magic. There is now money. It is an asset on their balance sheet, right? Because you owe them $1 million. They don't have it, you don't have it, but just trust me, the fugazi money is created. Not just that, the evil that precedes, that would be inflation that you have to pay back for 30 years. And that is where money comes from. And right now, there ain't no money. So the Fed and pristine collateral that the banks use in this gigantic Ponzi scheme of a bond market of debt, everything is debt. And the Fed is saying, nope, we're no more. Nope, stop this thing. So as you're seeing, usually it's the frothy at the top cripples first. Those are the bubbles that are popping. The crypto, yeah, and then it goes all the way down to your S&P 500, and then it just, that's how the system has always popped. The froth at the top first, right? The over leveraged, all that kind of stuff, and then it works its way down. But the banks, they are still tightening. Actually, I don't even know who would even want a loan right now with rates as high as they are. Not just that, you have a yield curve inversion like no other. It is completely backwards, but you can make money in it. Here, I'll help you. While you're in the bank, you're like, hey, I want that bond at almost 5%. There you go. Free money. 1 year. A 1 year, you take $1 million and you're like, well, I don't have $1 million. Can I borrow it? Then after I borrow it, no, because then it's, you see, it's the wrong end. They'll loan it to you too high and you're only making, 4.7%. So you kind of have to have the cash first. Or you can do an I bond. I think I bonds are about 7%. Do not hold me on this. But okay, so I just showed you how to make money there. Also, you have your TLT play. That is your bond market. When the markets think that inflation, okay, is going to destroy everything, TLT goes down. Well, until the people start realizing, wait, this is now disinflation. And then TLT, which is the bond, this is the bond market, goes up. You see, on this channel, I try to give you just simple ways. Now, I might be a little wrong on it. Okay, I might be a little off. This is kind of your macro. This is typically how it works. You have enough indicators to show you, like, this is kind of the bottom. Actually, here, I'll show you. And here, look. So we'll do a couple things. Number one, this is the S&P 500. This is the MACD on the monthly. See that little cross, convergence, divergence? See the blue and maybe it's orange lines. See where they come together and then they spread apart. You're not at a bottom. No, you're heading towards that white line, okay? So we're still heading lower, even though the market might go up a day, 2 days, 3 days. Also, there's one. Number two, see this? These are indicators. Yes, all of this is in the course. See how it's gray? It's not like green saying, boy, you've really hit a bottom like you did here. This is a bottom. This is a bottom. This ain't no bottom. So even when you see stories, the year when everything started to fall apart and you think we're at a bottom, you need to look at the charts. You need to understand everything that I say. That's why I'm a college professor, high school business. Well, not anymore. They didn't seem to care much. College a little bit more than high school. So I'll do that. But these are the things that you need to have tools in your tool belt. Whatever you got. Maybe the back of your pickup. But do not go into the market unless you know what you're doing. Otherwise, you're going to be like 95% retail. That retail turns into hedge fund manager. And then they say, hey, we'll invest your money for you. No, they're going to lose your money. They're just going to say, just buy and hold. And if you would have listened to me and you manage your own money, you wouldn't have charts looking like this, right? This is actually when they were giving out the stimmies. So, okay, when it happens again, let's learn how to make it more rather than make it less. U.S. personal savings as percent of disposable personal income. You are the lowest since forever. So I know it's difficult. That actually looks horrifically difficult. I am sorry, but I only have 2 solutions. Well, maybe 3. Marry into it. Maybe you can inherit it. Oh, there's 2. So if you don't have those 2, maybe a lottery ticket. 3, sell plastic junk on Amazon. I'll teach you how to do it. 4, turn your income going in the other way. Passive, I don't know. Trading's not so much passive income. You got to work for it. Even though it's not like roses, even though I would take some roses. That would be good. But in the end, guys, sorry, you just have to. You got to move your money. See, that's money right here. That's money. This is not money. So you constantly have to be moving those little digits around. Sorry for the work. But if I do it, you do it. And I will see you tomorrow.